All right. Let's see. This is good evening, everybody. This is small group coaching cohort 2, May 23rd, 2024. So I wanted to talk about two things, Jay, that you had brought up, and since I already have it kind of queued up on my screen, the OR3 and the trade framing in the early minutes, and then you had some questions on the retracements of the RL10 that don't trigger exits and sort of how to time that a little bit.
Yes.
I'm gonna let me share my screen. I have your chart pulled up. I want to get it while it's fresh in my mind. Let's see, share. Let me know when that's up for you.
Here we go. Yep.
Okay. Yeah, so this you sent me this one a few days ago. I wanted to address this one first, and then I'll do the OR3. Let's see. On the chart, I've circled in green where the RL10 turns up, crosses the RL30, and then the SMA 30. And the PSAR stays long and strong. And the question is, what to do about the R10 wiggles, and should they or should they not kind of take you out of the trade? Then the color of the RL10 changing from spring to summer around $80, which is probably spring to summer. I'm going to guess that's somewhere around in here. Or maybe it's up in here. And then, at 86, it changes summer to fall. So that means that's got to be about 80. Yeah, so here's how I would answer that one first. Yeah, this turning point in the slope of the RL10 is significant to me, because that's the first reversal, and that looks like it's probably, let's see, that's 30 minutes, so that's going to be intraday somewhere. That first reversal after a harsh winter is important because that's going to set the lower boundary of this channel. And then you have the dragon complex in here that's also shaping down, and right here is where he turns. So that's how you know it's a significant turning point, is that when you get the RL10 and the dragon turning, that is typical of a large, almost like a swing turning point. You have a long-term trend that is reversing. You'll also see shortly thereafter the RL30, which is slower than both of those guys. He'll also start turning, and I'm looking on. Yeah, that's the black line, and that's where he turns there also. So that's the RL30 turning almost exactly where the dragon was turning. So when those two guys are turning together, and then you have the this sharp turn in the RL10, all three of those things turning, that is typical of a major swing turning point. Right. So where you see some of these other ones, you see the RL10 coming to a point and reversing quickly, and those are the four like R10 wiggles you talked about. And you don't really see the RL30 reversing at all. So here's the shape of the RL30, and I think of that as the health of the trend, right? If the RL10 is the price, the RL30 is the health, almost the directionality of the trend. The dragon is a slower, and it defines a noise channel because he's wide, and that will often act as a buffer. The PSAR to me is really the price exit. actual price exit in my mind. Until such time, until the RL10 reverses on the upside. So when I see this kind of turn after 1, 2, 3, 4 legs up, and that's a significant win compared to a typical risk box down here, which would be about that much. You know, on that trade, you're probably talking about 3, 4, 5 risk boxes on the way up. So that's already better than an average trade. And we know that's going to be better than an average trade because it was able to withstand 4 hesitations on the way up before it finally rolled over. And then here's where the dragon finally rolls over. And here's where the RL30 finally rolls over. So that really marks the end of this excellent move that lasted that whole time. So here's how I look at that. When I get that first entry, it should be green just a moment. When I get that first entry, the PSAR is my exit. All right, it starts off here, and then the PSAR is gonna. It's gonna be black. Sorry, the PSAR is the price exit that I really respect. That's the non-negotiable one. The better that trade does, the more likely I'm going to take an exit higher than the PSAR, because once it gets beyond an average win or an average +1 standard deviation win, then I want to preserve more of the excellent move. And what I'm really watching for then is the shape of that RL10 which reversed, and it's usually going to. So you might get a wiggle and a wiggle and a wiggle on the first or the second. Especially on the first one, that's almost never going to get me out because that's not even an average win yet. It's still kind of noised, and I'm still respecting the PSAR on the way up. So my exit's going to be like right here. If I see 2 legs up, like I get this first one in the pause and it doesn't come and hit the PSAR, and then it gives me a second leg up and pauses and doesn't hit the PSAR, I feel like I've got an average or maybe even beginning to be an above average win. And then everything after that, I'm ready to take a PSAR exit on price. And I want to say this so that I just got done saying that the RL10 is the smooth price. But for me, the price hitting the PSAR is an exit. And the reason I say that is on 3-minute charts, you could see price action moving up and stalling up, and then it gets here, and then you might get something just happened. Then you might get 2 or 3 more big bars in a row. And if you had an above average win, you know, where your RL10 it's pinched a couple times and it's up in here, that's going to be a considerable distance away from this slowly moving PSAR, because the rate of gain in the PSAR is limited by its acceleration factor. So the better that this RL10 gets, really, the further away from the PSAR it's going to get. So if you get suddenly, you know, these big red bars or big red candles, you might get in a matter of 10 minutes a really harsh reversal, and it'll take the RL10 a long time to catch up and come back down here. And by the time the RL10 hits the PSAR or whatever, and it gives you a signal to exit here, price may have already come way down here. And so I just say, look, if I've got that above average win, I'm gonna trigger on the PSAR getting violated by price. And then if I see the RL10 after I've got my above average win, above average, then as soon as that RL10 reverses, I want to take the skin of the dragon, and what that will do is usually give me an extra half an R or so. And let me see if I can find a working example of that one. Yeah, this one might work. All right, this one was from today. So so there's my RL10 reversal, which got me out of this nice trade, gets me out here at the skin of the dragon. I didn't want to wait for it to come all the way up to here because I had 2 legs down, and that felt like a significant win, right? So I end up taking the skin of the dragon exit right there because it's like the second time it came to a point. Like this one, I wouldn't be offended if you got out here, but this one, I'm still using the PSAR as the protector. That's not that's not an abnormal win yet. So I can afford to give it a little room to go. But when it comes down to here, I've already had 1, 2. This is the third time that it's reversed, and I have an above average win because there's my risk, and I'm holding 2R. So I want to preserve that win. So that's why I accelerate to the skin of the dragon after I have a significant win. Now, this next trade on the long side, that's just, if I can exit here, now I'm psychologically ready to take the price going through the PSAR as my entry on an SSC. This one runs up quickly in 3 bars. It goes 1, 2, 3, and everything feels good. I mean, it went through the VWAP, it went through the Bollinger Band mean, and maybe I think it's on its way up to test the previous peak of the RL10. So I'm hoping that it's going to test here and then keep going. Then I'm going to be really happy. But life being what it is, it reverses sharply on the next 3 bars. 1, 2, and now it's coming. Now I exit here just because it failed back under the VWAP and failed under the Bollinger Band mean, and I got about 30 seconds before this is starting to become a negative trade. So I'm basically just gonna scratch that one right there. It tried and then failed, and I'm not gonna let that become a negative trade. Now, if you are doctrinally committed to the PSAR, I'd end up getting out down here. And then I feel really stupid because I had an R in hand and I let that somehow become a negative 0.5. That would really hurt my feelings. So when it started failing, and it was the 3rd bar in a row of failing, I just said it's time to scratch that one and get back to the 0 state. So now what I've got is I've got this RL30, which is the health of the trend. That should be black. Come on. There we go. There's the RL30. Now it reversed right here, so that it still feels fairly positive. And I've got a RL10 low and a higher low. That sets this up as a COTA 2 entry long because it crossed the dragon, crossed the Bollinger Band mean. It's breaking through the PSAR. And now I still think this has a chance to get all the way up to that previous official resistance level. So I put the standard risk box on it. It runs up a little bit. Now this one here, this was not quite an R. I wouldn't be offended if you took this exit. But I was really watching the PSAR at that point because it was still early. I felt like it was early days in the trade. It then takes the next run up, but then fails 1, 2, 3, and now I want to try to keep a fraction. So there is some trader judgment in there, but I like to give it I like the first leg. I like to use the PSAR to give it a chance to get some traction and go, especially when it's after a down move. I want to give it a chance to go on the reversal. So that's about what I can say on the how to play the R10 wiggles. But I
So
would say the what you'll also hear me say a lot too is just if you just respect the PSAR, that PSAR never got hit by price
right.
until it was up almost where you had a double top in the R10. That little retracement was enough to make the RL30 finally roll over. But if you wait for the RL30 to roll over, you might have ended up getting out down here at the Bollinger Band mean, and then
Right.
it would hurt my feelings to give back that much. So I usually just say, look, as you're building proficiency with this, make sure that you respect the PSAR as the zero defect exit. If you ever exit higher than the PSAR because you have an intuition or a feeling, that's fine. But don't ever let price go below the PSAR, particularly after you have an abnormally good win. The
And
PSAR is sort of that.
do you find like something this little chart and the other chart had in
Yeah,
common is that once the dragon itself crosses the 30 SMA,
yeah,
is that typically indicative of a bigger
yeah,
move?
yeah. It's done, and there you'll notice this is where the dragon and the RL30, and then I want to compare that to where the let me clean this up. Yeah, so the genuine center of the trend is this 30 SMA. That's that dotted red line.
Right.
That's really the mean that everything is going to revert back to. So um, when the dragon itself rolls over, now the middle of that dragon is an SMA 10. So that when the dragon crosses, or that really signals the end of that upside move, because here's where it crossed on the from the downside when it reversed. That's like the opening of the trend, right? So as price starts accelerating up the stack, you start seeing the SMA 10 pulling away from the SMA 30. And it gets wider and wider and wider and wider until the dragon starts to roll over. And because it's a 10 SMA, it rolls over faster than the 30. So now when you start seeing, now you can see it coming to a point. That's the end of it. If you look at other time frames, you'll also notice that the same thing happens with the RL30, which is this. This is where the RL30 crossed the SMA 30. And here's where it rolls over. And then shortly after this, probably right about here, you would see the RL30 crossing the SMA 30. It's worth it to just call up a new chart once in a while and just put the moving RL30 and an SMA 30 on it. And you'll notice that the slower SMA 30 will have these long ocean waves like that. And you'll see that the RL30 reverses faster and goes like this. And you should look at those as significant signals of an upside opportunity until it crosses. And then you have a downside opportunity. And if there was only one thing that I could trade, it would be the slope of the RL30. It really gives you enough data, and when it rolls over, it's significant. And when it crosses the SMA 30, that is also significant. And Yeah. So now if I add the RL10, that's even faster than the RL30. So that will tend to look like this. So that's your P1. That's when the RL10 crosses the RL30. That's what we call the P1 pattern, the regression line crossover outside of the dragon. Now, if I finally add the 10 period SMA in there, he's going to actually look something like this. He crosses the SMA 30 a little faster than the RL 30, but yeah, your intuition is correct. Your observation is correct. When the dragon rolls over, that thing is like decisive. The RL10 can wiggle on the way up like it did here, but the dragon tends to be very smooth and orderly. It always rolls over before or at a lower price level than the peak. Here's where the R10 rolled over. Here's where the RL30 rolls over. And on the downside, here's the bottom of the dragon rolling up, and here's where the RL10 reversed. So it has a little bit of a rounding effect, I guess I would call it, that the R10 comes to a sharp point and then usually reverses to a sharp point. And then the dragon is slower and smoother, and it rolls like this. So if I were to draw the channel of interest, it's really from the peak of the point of the R10 to the point of the R10. That's the widest channel. And then there's kind of an inside channel, which is the peak of the dragon here to the belly of the dragon here. And that's usually about 80% of that wider R10 channel. And then the SMA 30 usually is going to look like this. So when I get a maximum favorable excursion up to here, what I'm really saying is from the SMA 30 to the peak of the R10, that's how much extra enthusiasm the short-term traders had. That's how much power they had to move price away from the mean. And then when it's done, that reversion to the mean trade is looking to get back to the middle of the river, that SMA 30. Yeah. So when the dragon does roll over finally, and it crosses that SMA 30, like it did right here, that run is done. And now it's gonna, all I do is I draw this line. I say, if it comes back halfway, it could go to there. If it comes back all the way, it's going to come to there. How strong is that reversion? Is it going to come back and test this low, or is it going to test halfway in reverse? If it does that, then I feel like, oh, I've got a kata 2 opportunity here. So I'm kind of using a form of poor man's Fibonacci in that sense.
Okay.
Now, I wanted to shift and talk about that OR3
Right.
with if you guys are okay with that. So this is where the market closed. So it closes right here. Now there's two cases in the OR3 that I noticed. One of them is we mark off what the size of the the average gap. So any open that's between yesterday's close and this average gap, anything in here is, I think of that as a small gap. If there's a small gap, then there wasn't a lot of surprise, wasn't a lot of news, and it's more likely to be an average range or less. But if it turns out to be a large gap, meaning it was more than the average gap in either direction, it's from these areas that we're more likely to get a range stat move. So if it gapped up to here, and here's the open, it's a large gap up from the close all the way up into here. This is more likely to be, if I put an R10 bracket on that, this is more likely to be that large move in either direction for a range stat move.
That's your gap stat ratio. What are you talking
Yeah,
about there?
yeah, that's that gap statistic. So if it's a large gap, then chances are all of the traders are in an exaggerated state of mind. They are already nervous in the service. So I'm expecting a big move right from the opening, and off it goes. Like 2 times out of 5, the open is going to be within 10% of the high or low of the day. So if it was a big gap up and it just starts going, I actually don't even want to wait for a 3-minute bar to close and then put my little bracket on it to say, all right, now if it goes higher than that, I'm long. And if it reverses, I want to be short. Or I want to be short if it comes back out. Come on, dummy, draw that red. There's my OR3. And I don't really want to wait, to get long here or to get short there, especially if my R10 box was smaller than the OR3. Because I just look at that and say, look, here was the open. And if I put an R10 box on either side of the open and it breaks out this way, I'm long immediately or I'm short immediately. And now I might even actually get a 2-hour trade in the first couple of minutes. I'm not offended by that. So here's what I do. If large gap, then R10 bracket and trade it immediately. But if small gap, then OR3. And in that scenario, what often will happen is that here was the close, and then here was the open, was close proximity. In the first 3 minutes, it might just be a small range like that. So I want to just say, give it 3 minutes to establish the 3-minute boundary, and then trade the breakout of that. But typically, the larger the gap, if it's a large gap, this thing opens up here, and it's either going to start rocketing up or it's going to reverse immediately. And so I don't want to wait.
Are you saying a large gap? It gaps beyond yesterday's high and low?
No. So the gap stat.
Okay.
Now, I said no, but that actually that would be an additional good thing.
Okay.
So the gap stat is, I'm going to go back and look at the last 200 days. And I'm going to measure the absolute value of the gap. Because what I know is that the direction of the gap has no predictive value for the follow through. All right. So if this was the close, it's either going to gap higher or it's going to gap lower. And so if it opens higher, it's that I draw this line all the way over to the close. The follow through after it opens is either going to be, it's going to close higher than it opened, and that would be a positive follow through, or it's going to close lower, and that's going to be a negative follow through. So this could be gap up, close higher, gap up, reverse and close lower than the open. Check. It could be a negative gap that closes higher. So in other words, it could gap down, but then close higher. So that's this, gap down, but reversed and closed higher. Or it could gap down and fail and go lower. So those are the four cases. What I've noticed is over the last 20 years of studying this, that the direction up or down does not predict reliably the direction of the follow through. Like I can't say, oh, every time it gaps up, it's going to close even higher. Or it gapped up, therefore I'm going to fade it. Because the statistics on that change every 5 or 10 days. Like you could go through a 2-week period where every gap up followed through higher. And then for the next week, every gap up reverses and closes lower. So the truth of that changes so much that it's not good enough to have a single rule. But what we do know is that the size of the gap predicts the size of the follow through, but just not the direction. So if I had a small gap, I'm expecting a regular range day. If I get a large gap, I'm expecting a range stat day. Right? So what I will do is the day that I want to trade is large gap days. As a day trader, I want to trade days that have large gaps. I don't care which direction it gaps. As long as it's large, that means it's already in play, and there's a lot of guys that have to come in and change their positions up, or they're greedy or whatever. So a large gap day, I want to start trading right from the open, because from the open, remember, the open is simultaneously the high and the low of the day. And on a large gap day, I have the best chance of getting a range stat move to the upside or a range stat move to the downside, which is an average range plus one standard deviation. If I express that in terms of the R10, if I put the little R10 bracket on the open and take the first breakout, not even waiting 3 minutes, it's just as soon as it breaks higher or lower, I'm in, and I use that open as my initial risk. A range stat divided by 10, if this was the range stat move, there are 10 of these boxes. 4, 5, 6, 7, 8, 9, 10 to scale. Look at that. There's 10 boxes from the open to the range stat move, and I use one of them to be my risk box to pick the direction that I'm going to go. And then that gives me 9 boxes of rational gain that I'm not surprised if it moves a full range stat, because that's the maximum reasonable intraday move based on the last, the statistics of the last 30 days. And the good news is that if it actually breaks beyond the range stat, it could move another range stat. It could actually move 2 range stats. But this is really the definition of irrational exuberance. So irrational exuberance. My job is to try to capture as much of this rational exuberance as I can and then be ready to pile on if it goes even further. If I'm very lucky, I'm able to cash, get a bunch of market's money on this position. Maybe I could get 2 or 3 positions on it. It moves 3R in my favor, add a position. Moves 6R in my favor, add a position. Now I've got plenty of market's money as a cushion to add even more for the irrational exuberance, with the one caveat being, once it goes past a range stat move into irrational exuberance, I never let it come back inside rational exuberance. This is all speculative, and I'm not ever going to let it cross back inside the rational exuberance. So that's what I want to say about that. Now, what this sets up then is a decision tree when to use the OR3, when to use the R10 bracket, if I call it that way. And that comes down to the gap. Big gap, I'm using the R10 bracket and trading it immediately from the open. I'm not even waiting 3 minutes. If it's a small gap, then I'm going to use the OR3 because it actually has to leave the station. I think of the where it closed yesterday as the train station. If there was no gap, that train is going to chug around a little bit before it finally gets some directionality. So I can afford to wait for 3 minutes, put the OR3 on it, and then trade the breakout. That's the OR3. But if this was where it closed and now suddenly there's a big gap up, dude, it's in play, and I'm going to bracket it fast, and now I'm ready to go immediately. It could be within that first minute. I mean, that's not unusual. And then my job is to get my risk out by getting no lose plus dinner for 2 as quickly as I can. So that's the difference between those 2 entry techniques. That make sense?
Yes, thanks for the clarification.
Yeah. Now here's the second trade out of that series. Since we're here, let me talk about the second trade. And this always works good on the downside gap. So here's where it closed, and then tomorrow it opens with a big gap down and then has a harsh sell-off that terminates in a little doji, something like that. I'm ready to see a 1, 2, 3. And I'll get in on that one. Like, I call that one the morning hook. And that one looks like this. So that's the lowest low in that price stream, and it closed here. Now, when the second bar closes, I can look at the low of the second bar. If it's higher than the low of the first bar, then this officially becomes bar 2, and that becomes bar 1. Then I put an entry just above the high of bar 2, and then bar 3 is live. And if bar 3, while it's live, goes higher than the high of bar 2, I'm long from right there, as long as it did not make a lower low compared to bar 2. All right. So if this was the end of the sell-off, up, that's bar 2, and it closes right there. Now bar 3 opens here, and it goes immediately above. Bingo, I'm in. 1, 2, 3 entry. Because its low was higher than bar 2's low, which was
You don't
higher.
wait for it to close?
I don't wait for it to close. I have enough information and off we go. And what I will do is there's my wrist box. It's not unusual to see that to be the size of an R10. So there I go. I'm in fast. Now, here's a case where bar 3 fails. It's like, here was the sell-off. Here was bar 2. So now when this closes, I see that the high or the low was higher. So that's bar 2, and this is bar 1. Now here's bar 3, opens, but it sells off below the low of bar 2. As soon as that happens, this is no longer a 1, 2, 3 entry. I've lost all interest in it. I got to wait for another pattern. What I'm looking for is harsh sell, immediate response higher, and bang, right there is where I'm long. There's a 1, 2, bar 3 is live, and that's where I'm getting long right there. I don't want there to be any hesitation where bar 3 comes drifting back down. That I want to see this thing just going. And I'll typically just slap the R10 on it. And then my only job is to get my risk from here above my entry level so that I can lock in no lose plus dinner for 2. Now it's a science project. Now I can start working on simply raising that stop as it makes sense. As it starts continuing to work, I just start raising the stop. I let the upside take care of itself. Once I've got my risk out of it, then I can come back and say, gee, I wonder where the R10 is. And as long as that's going, and then it starts to roll over, that's where I'm going to hustle that exit up to the skin of the dragon on the upside. So OR3, the R10 bracket, then what I call this 1, 2, 3 entry after a morning hook. That one is so reliable that's like just automatic. And the bigger the gap and the harsher this sell-off, the more I like it. And then the sooner that it makes this reversal, the better I like it, because that tells me somebody was watching down here to pick off a bunch of stops, and they gapped it down, they ran the stops and got them, and now they're buying inventory on a fire sale. And I want to be part of that. Now, all of this is happening, before from the open to about 60 minutes in. After 60 minutes, after that first hour is in play, now I'm back to just 30-minute charts, standard patterns, because after the open you get about 60 minutes of just opening shenanigans, which consists of the first 3 minutes, then 10 minutes, then 30 minutes, then 60 minutes. And after 60 minutes, it's just kind of a normal day at the office. This is all the opening chaos. And again, so when I look at it on that timeline, if this was the close, if it's a big gap, I'm going right from the open with the R10 bracket. But if it was a small gap, then somewhere after the OR3, that's where the OR3 kicks in. If I didn't get that, I'm looking for that 1, 2, 3 entry. And then somewhere around 30 to 60 minutes, I'm starting to look for those standard SFCs, Kata 2s, collapsing dragons. By this time, the market is sorting itself out. And then really, after 60 minutes, I have 2 30-minute bars. I've already seen the first 2 bars of the day, and now I can actually, here's a case, that's a 1, 2, 3 entry right there. If this was the low of the day, that's I'm actually ready to get long on 30-minute bars right there. And then if it opens, here's where it closed and it opens here and it goes up through here, I'm long right there, and that's a 1, 2, 3 entry. And I'll typically, by that time, the PSAR should be down around here somewhere and starting to roll up, and I just put my wrist box to the PSAR and let's go. And then my only job there is get my risk out. And once I do that, then it's a science project. I feel like my trader skill, I just hand off to my assistant manager, kind of, the kid that's running the day shift for me, whatever that might be. And then just play by the rules. And then all I'm doing is like I said before, the PSAR, trusting the PSAR all the way up until the R10 rolls over. And then I'm going to accelerate my stop to the skin of the dragon. So I'm just following the PSAR all the way up. And then the R10 rolls over. Then I just jump that up to the skin of the dragon to lock in the last little piece. And 80% of the time, that thing would have come down and touched the PSAR anyway. So I'll just take it there. 20% of the time, it will reverse north of the PSAR and keep going, kind of like it did in here. And when you see these little, that's 4 or 5 bars of reversal, and then it came. That's why the R10 wiggled, and that's why you might have gotten out here. But if you just trust the PSAR, you can decide get out here and then re-enter here. That's where the re-entry will help you. So this adds a little more complexity to, the trader's decision making, because you got to start making some judgments about size of the gap. Do I want to do OR3? How many symbols am I trading? Did I have a large gap? That kind of stuff. Did I have a lot of other prepared trades? All I try to do is get right from the open, maybe 1 or 2 symbols to get them going right away. The biggest gappers. And then try to make some money in the first 30 minutes. Then after 30 minutes, 60 minutes, it's just, I'm managing it on 30-minute bars after that. So that's what I wanted to say about that.
For the rest of the day, you only look at 30-minute bars after the first hour?
No, well, it's 80% of the time I'm looking at the 30 minutes, but I'll pick 2 or 3 sniper trades of the day to do on the 3 minutes. So I look at the 30-minute bar I'll have a stack of between 10 and 20 symbols that I'm looking at. And on a 30-minute bar, once you get used to this style of trading, you can trade 10 to 20 symbols on a 30-minute bar easily. Because if the price is going up, it's going to take it'll take 2 negative bars for the RL10 on a 30-minute bar to even roll over. So I'm an hour away from having to do anything on that. In fact, all I got to do is, as it moves up, I'll just start moving it to the previous low of the bar or something like that, or just trust the PSAR, and it's automatically managed. So I can manage 10 to 20 symbols like that pretty easily. I mean, it's 20 years of practice will do that for you. But what if I had on the 30-minute bar, this thing did this? I might say, you know what? In about another 30 minutes, that thing is going to be a 1, 2, 3 entry right here. Check. It's not an entry yet because it closed here and it opened here, but it's starting to move up. I know that I have an official 1, 2, 3 entry on my 30-minute bar, and that could take anywhere from 10 or 20 minutes to do. So I'll just say, let me take this and drop down to a 3-minute bar. And you know what you'll often see? You'll see a sell-off and a kata 2 happening on the 3-minute bars. And you say, look, I could get in on a kata 2 right here, and this green line appears to be like right here. So I can actually get a better entry on the 3-minute and then add a second position when it breaks above this green line on the 30-minute. That's like the extra confirmation. So I could either get a second position, or I could be slick and go half and half, and then I get an average entry of this. But then if the kata 2 fails, I only fail on half my position. So there's some risk management. And the beauty of that one is that on the 3-minute bar, if I get the kata 2 entry here, my stop is right there. So that is really a low risk trade, very low risk. But if it works and it breaks through the designated entry on the 30-minute bar, then I feel like this thing could really go, and then I'm happy. So I use the combination of the 30-minute and the 3-minute to be like slow and fast. And I can handle, 2 to 3 symbols at once here before my span of control is violated. And I can handle 10 or 20 up here. So I'm toggling back and forth between the 3 and the 30. Special case for fast moving symbols, normal management intraday here. And then before the close, I just have to decide what to do with any open positions on the 30. How many of those do I want to hold overnight? Not many. 1 out of 5 or 1 out of 10. Most of the time I just get out of it and say the heck with it. But maybe there was something like NVIDIA was coming up. NVIDIA, you guys may have been hearing me talk about that all week. NVIDIA was a case where I wanted to hold the position overnight going into their earnings, and they gapped up 10% on a $950 stock. So that turned out to be one of those times when holding overnight. Now I had 7 or 8R in hand as a cushion because it might have gapped against me, but I use markets money as the cushion for any of those that I want to hold overnight. So I'm risking markets money rather than core capital. So risk management in that sense. Fair enough?
Awesome.
Okay. Okay, that's what I wanted to say about that. Let me run it over to Kevin and Damien then. We're at 8 o'clock. It's got about 15 or 20 minutes yet. I felt like this was pertinent to how you're trading, Kevin, because you're using the 3 and the 30 as well. And my spider sense is that you're kind of doing that, but you're focusing on EWW sort of as your trading element, your trading target, learning to work those 2 time streams simultaneously.
Yeah, I'm frustrated with I'm more frustrated with the 30 on it.
Yeah.
More because it seems to go more sideways. Like I'm not getting
Yeah,
when it reverses on me.
That's,
It's just
that's a real
I just don't
problem.
get enough follow through.
Yeah, and
So-
now what's that's why the reason I want you to practice that 30 is though it's frustrating because you feel like you got a lot of time on your hand now. So
Yeah.
you can actually if you get competent on the 30, that's where you can start adding 10 symbols and you can say,
Yeah.
hey, I if it's not working, I don't have to trade it at all on the 30. I can just quickly in about 2 minutes, or really 1 minute. In 1 minute, you should be able to take a quick snapshot of all 10 symbols that you're looking at. It should take you 2 seconds to evaluate the current bar to see if it's getting close to your decision. you know, if your decision is the SSC or the COTA 2, in 2 seconds, you should be able to say, yep, nope, yep, nope. Well, if you're on the 30-minute bars, you don't have to make a 2-second decision. You could take 30 seconds and
Right.
really study it and then decide, all right, that's one that's starting to move. I can trade that on 30 minutes. It's making that move. And maybe only 2 or 3 are live. Okay. So if 2 of the 3 are just kind of cruising along like cows walking through the pasture, but the third one is showing some signs of life, bingo, go put that one on 3 minutes. Come back and check the 2 that you have on the 30 minutes that are live, and then scan the other 7 if you have excess capacity. But really,
Mhm.
if you had 2 live 30-minute bar trades and a 3-minute bar trade, that's a pretty good day at work. You got enough.
Yeah.
You got enough to focus on there to make your living. If 3 out of your 10 symbols move, you should be okay each day. But you really got to practice on one symbol the mind split between a 3-minute mentality and a 30-minute mentality, and how to toggle back and forth and not lose your focus on where you are on the playing field.
Right. And I'm figuring out that I could do that. Like today, this week I didn't trade much. I was helping my son in the machine shop. But so I tried watching the 30, and then
Yeah.
invariably, like, I was just too distracted. Like, so
Yeah.
I'd come back an hour later and I'm like, oh dang, like
Shit,
today,
yeah, it was
it
there.
was,
Yeah.
yeah. So, so that's, but I guess that's the point, is that I want to build it.
Well,
I'm
yeah, I
going to go
mean,
help them out.
now
I want to
here's
be
the
able
other
to
way
do
you
that.
can
And
do
then,
that. Yeah. Here's another way to do that, is to say you could put alerts in there so that you get an audible sound uh when
yes, I should
when
be.
it hits. And like, you don't have to wait for I like, you could actually put an alert at the high and low of the 30-minute bar. I'll say it that way, right?
Yeah.
So
Yeah.
imagine you had imagine that you had some price action like this. Let me get my little. So maybe you had this and it terminated in a doji. I just always love the doji on the 30. And you're really an hour away from getting a 1, 2, 3 entry, right? But even when you see that doji, you could automatically say, look, if that thing goes below the doji, I'm just gonna go short anyway. So put that order in.
Hmm.
I mean, because why not? The trend of the day is down. It temporarily got held up in this little doji. So if as soon as it starts resuming and makes a new low, there's my signal. And use the doji as your risk box. Which means I could actually put this one. Now, I may not want to get long right there because I'm going against the trend, which is down. So maybe I just make that an alert, and then you can go do your thing. And what if the next bar turned out to just be this, and it never violated, and you had another one of these, and then 90 minutes later it finally ticked? Wouldn't you instantly go long there? I would, instantly.
Mm-hmm.
Why? Because the trend was down, but it never violated. It got very calm. Now I'm in a sideways market, and now I have the first piece of information that says maybe it's this reversal, and now I can come back to the start of the downward trend and say that's maybe my target. So I can get long here with the risk box here and hopefully get true to the upside. So just put the alert in on, like on TC 2000,
Yeah.
you can have that
Yeah.
as the audible alert, and there it goes, and then off you go.
Can you do
So,
alerts like where RL10 crosses the 30 SMA and vice and so forth?
Say that again.
Can you do alerts like
Yeah.
where an RL10 crosses the 30 SMA?
Sure.
But you have to have TC2000 to do that.
I do it in TC 2000. I know Ninja Trader can do that. TradeStation you can establish those. A lot of
TradingView?
times, TradingView should do. I'm not an expert, but
Okay,
there are some guys like Griff and Phil, or
I'll ask them.
yeah, they could do it. The other thing you can do is you can just
I was
eyeball.
gonna, I'm sorry to interrupt, but I was gonna say that on Thinkorswim you can do it too, because I got, all the alerts from Griffin and so on, so I know it can be done on Thinkorswim.
Yeah. So what if you had what if this was your live bar right here? This was the current time. And you said, look, I can see that the SMA 30 is here and it's clearly marching up, and that thing has a momentum all of its own. So I can just sort of project. And if the RL10 continued to fail, I could expect it to be somewhere around here, the meetup. Maybe I could just put an alert here and say, when the RL10 crosses through here, if it went fast, I really want to go short, right? But if it was slow and it crossed where inertia does, I want to be short here. I want to be short there if this thing collapses. And now I actually get a move to the Bollinger Band mean. And then if it violates through the Bollinger Band mean, I can put a second position on. The faster it fails, the more I like it. But you might just say, if nothing else changes, this is where I expect those two paths to cross. Just put an alert there and then wait and see. It says, hey, wake up. You come over here and you look and say, oh, that thing is dropping like a rock. Get short or wait for it to cross here to get short. You could make that decision in 2 seconds because you're trading your favorite symbol. But if it just cruised down here, you could look at it and says, oh, it crossed where I expected it. Now I'll just take a leisurely short, just like I'm supposed to. That's keeping the human in the loop. But you could also just say, let me put a limit order in right there and said, if it violates through there, no matter where it violates, I want to be short. And the alert is, hey, you just entered short. What? So I don't recommend that. I recommend get the alert and human in the loop verify.
Yeah.
Yeah.
So if like I want to keep, I don't want to spend all my time hunting, right?
Right.
But I do find that I've been trying to work through this whole like on my trading, like for my plan for the year is like
Yeah.
eventually I got to get to a point, if I want to use enough capital, I have to get to the point where I do more than just Mexico.
Right.
Just practically. Okay. So is the like, and then you've got that TC2000 bundle on. So I'm thinking I'd like to focus on, like you were kind of saying, maybe I focus on, maybe I pick 10. That's all I do, not 30 like you or 60, but
Yeah.
I made 6, 8, 10, and I watch all those on a 30 particularly. And then I just kind of pick the best ones. And I always have Mexico sit there because I'll know it so well by the time I'm gone through this year. Right. You can always just say, well, I'll just do something in it. Is that a reasonable way to go?
Yeah,
Still
so
specialist,
my guidance
but
to
I'm
you-
really limiting.
Yep.
Yeah.
Here's my guidance to you. There are 3 ways that I add symbols to my watch list. The first category out, which I'm going to number category 3, is any continuation pattern from one of today's trades. Like, let's say this was, I don't, maybe that's EWW and it was here. Dude, and it closed right here. It opened here and gave that massive move and closed very well. That's in play for tomorrow. And I'm ready instantly. I'm already going to put the alert to buy it here or maybe to short it there. Done. It's on my list. So any continuation pattern from today gets added to my list. So I'm going to have some watch list. So any continuation pattern, that's category 1. Category 2 is any new swing pattern. And I'm going to say, or sniper. Because the mechanical swing patterns are 7 proven patterns that say for the next 3 to 5 days, if this thing starts moving, it could move for 3 to 5 more days. So if I get a mechanical swing pattern like a 5-day down, there's a 5-day down. 5 lower closes. My mechanical entry for that is 5 cents above the high or 5 cents below
Yeah.
the low, because that's going to become a 6-day down, and this one will become officially the 5DD long. So any new swing, and then what that means is for the next 3 to 5 days on the successful trade, that thing could start moving up and moving up and moving up. And now the anomaly is over. It has come back to the previous 10-day high, and that swing trade is over. So if that, I like watching that new mechanical swing trade pattern, because that gives me a symbol that I can pay attention to very efficiently for 3 to 5 days. The sniper trades turn out to be 1-day pops. Plus could grow as a swing. Like the Godzilla pattern is dramatically oversold on 150 days, 30 days, and 10-day look back. And it's either a very small volatility or a large volatility. Either one of those is a Godzilla. When the Godzilla works, that thing could actually work for 90 days. In fact, when SPY reversed at around 400, 4 or 5 months ago, that was a Godzilla pattern all the way to a new high. It started off as Godzilla. So the sniper gives me reasons to believe that that symbol is poised in a compound critical state to make a large move. So I scan 60 symbols. You could scan more. And usually there's from 5 to 10 of the sniper pattern. Now there's 5 sniper patterns that we look for. Any one of them is a compound critical state. So category 2 then is going to be new setups. Check or hold.
Okay.
So number 1 was a continuation that's already in play, and I've already invested in the timing and the price action, and I've set the alerts, and I'm already familiar with it. So it's an easy prep. The third category is the old reliables. And that's things like EWW, DIA, Brazil, small caps, Devon Energy, Alcoa, Cliff Natural Resources. So I got about a dozen of those things that are so habitually tradable that I've traded them for 20 years. They're on my list. So once you get proficiency, here's what you got to do. You got to get proficiency on some number of the patterns, and you got to get proficiency, in my view, mastering the 3-minute and 30-minute skill. And as soon as you do that, you can start expanding the number of symbols as soon as you're ready. And I think it should be like this: EWW, then add DIA, then add EWZ, And once you can get 3 patterns on there, you just, hey, those are your old reliables. You'll always be able to trade those 3 no matter what, forever. Then I would start with, I would just go straight to the
sniper.
and, you know, realistically, I think you're a month away from that. A minimum of a month.
Yep.
But once you're comfortable trading those 3 symbols, I would even add, just say, hey, pick Devon Energy for the energy module. Pick Alcoa for metals. Pick AI for the for the AI sector. Fucking pick Microsoft as the low risk tech leader.
Right.
Pick Walmart as the Main Street America. You're up to 8 symbols, and you don't even have to monkey around with swing trade patterns or the sniper yet. And you've almost got a full plate. I like XLF for the finance sector, because that often trades differently than the broad market. And you got 9 right there. And then add EEM for intraday for your global. Sir, there's 10. Those are your first 10 symbols. And you could trade those are my old reliables right there. Now,
So with the
yeah,
you've
ahead.
got that special on, would the TC2000 bundle help me with this if I specialize that much?
I don't think you have to. I don't think you need the bundle. I mean, I would love to sell you the bundle. You know what I mean? I'm a businessman. Got to feed the bulldog.
Yeah.
But
Yeah.
what the bundle does is for a hedge fund manager who has to not just day trade, but also swing trade, and is trying to get 50 or 60 positions in different time frames and be able to manage a broad set of systems. That
Right.
one has all the day trades, all the swing trade patterns, a bunch of clever tricks for longer term trade framing, where you want to hold for months and months at a time with some portion of the port. So that's one where, and it also serves as a guide to how to really leverage the power of TC2000 if you're a young man and wants to become a coder and system developer and you want to get really clever. It has a lot of power in there. I think with your current chart setup, you could specialize in those 10 symbols. And if you look at the simple the TC2000 format that I use, that, you know, the numbers and whatnot that I look at, which is just like this. What do I really need to know about it? Well, I need to know this is the auto framer reward to risk ratio. What's the R10? What is the range stat divided by my risk? What's the mechanical entry for end of day trading, the initial stop? That's the mechanical high and low of the day. What's the range stat? What is the distance to the 10-day high? You know, that's.
Yep.
And then what did
Yeah,
it do?
yeah.
Then what did it
Yeah.
do today? Do you need much more than that? I don't think so.
Yeah. No.
If
And
you're
I've got
only
all that
looking at-
coded into TradingView. Yeah.
Yeah, if you're only looking at 10 charts and you have your standard setup with your R10s and your dragons and all that stuff and the PSAR flip, you could just look at the chart and say, yeah, put my frame on it. And in about a minute, you should be able to frame any trade you need for that tomorrow in less than a minute. So 5 or 10 minutes of prep time on your 10 symbols, and you should be ready for tomorrow. In my view, that's
Yep. No.
that's how much time I spend on it, to be honest. Like in the time that it
Yeah.
takes me to print the report, I adjust my stops. When you see me working on the hybrid swing portfolio, that's me prepping for tomorrow. I'm talking my way through my 30 symbols, and some of them I'm going to really pay attention to, but I always pay attention to my old reliables. You know, I'm going to watch McDonald's tomorrow because it's got a 4.2 to 1. And I'm going to watch Nvidia because it was up 9% today. Done. You know, and then the way I sort that every day is I look at it just on the basis of reward to risk ratio for the auto framer. All of these right here are better than 2 to 1 on a test of the 10-day high. That's my auto framer. You know, if the 10-day high is here and price is down here, and this was today's range, and I use today's range as the risk, how many of today's ranges to the 10-day high? That would be 5 to 1. I could trade that right now. And then all it has to do is break out above today's high for my entry and today's low for my exit. And I call this, swing trading one day at a time. And then if you had those 10 symbols on 30-minute bars, selectively you could drill down to the 3-minute bar for the one. Which one of the 10 symbols had the biggest gap? You'd see that instantly reflected in the percent change column. That's why it's in the first position. As soon as it opens, it's comparing today's open against yesterday's gap as a percentage. I want the ones that have the worst gaps in either direction, or the best gaps in either direction. And that's where I start my day. And then I trade, as I described earlier, till about 30 minutes in, and then I start picking up the 30-minute bars. Certainly by 60 minutes in. But this is the special where I'm monkeying around with the gap and the 1 or 2 movers right away, just to get my feet wet and to stay awake.
Mm-hmm. Okay.
So you're going to find most of your gains are going to occur from the 30 minutes until lunch. And then lunch will suck. And then there will be a half size move in the afternoon. But if you were very good for the first 3 hours of the day, you'll get 80% of your gains from that time window.
Yeah. That'd be the goal too. Yeah. Okay. And I'm just going to keep on Mexico, 3 and 30, 10 in the middle for a while.
Then I would say, just look at, as soon as even before you're fully comfortable, add DIA and Brazil.
DIA. Okay.
DIA, Brazil, and then I would go Devon Energy.
I'm struggling on the 30, so maybe what I should do is do 3 and 30 on Mexico, and then just watch DIA and AWW on a 30-minute only.
See if the 10 helps you. See if the 10 helps you. It may be that the 10.
I actually really like the 10.
Don't make it harder than it is.
Yeah.
If that's where it's at, choke up on the bat a little bit and get a nice good swing.
Yeah. Okay.
Yeah. So Damien, I want to cover risk management with you separately.
That's fine. I thank you because I knew we weren't going to have time to discuss the homework that I did for your review.
Yeah, let's do that. We'll do that maybe Saturday after.
Whatever.
Let's do it Saturday after we get done. Yeah.
Yeah, that's
I
fine.
gotta get ready for the nightly, which is happening in 2 minutes, so.
Yeah, no, that's fine.
Just
Yeah,
has a little bit, yeah.
yeah. we'll
Plus,
do
you
that.
needed
Yeah,
to
you
hear
can-
some of that stuff anyway.
Yeah, you have the stuff. We can talk about it after the meeting on Saturday. Not a problem.
Let's do that.
Sounds good. Take care.
All
Have
right,
a good
guys.
night.
Okay, thank you.
Bye-bye.
All right,
Yep.
see ya.